I got it. All right, cool, cool. All right, guys, so let's get this chart out of the way and let's get moving on into our next modern versus classic zones. I feel like we hit that. Okay. I mean, we've talked a little bit about volume, and somebody actually just brought this up in the chat room just a few minutes ago. So I want to go over something that we're introducing. Thanks, babe. VRVP, volume profile, offers insight into large order accumulation. The VWAP or anchored VWAP aligned with supply and demand often brings powerful moves as well. Volume helps refine supply and demand zones for precision. Modern zones leverage deeper market structure and volume data. Modern zones leverage deeper market structure and volume data. VRVP explained. How many of you listening right now use VRVP?
Otherwise known as volume profile, guys.
Yeah, volume profile. Hey, Lorna does. She's like, heck yeah, dude. All right, do not know what it is. All right, cool. I was hoping that there would be at least half of you that say no, and anyone that's trendy from the past would say no, we don't use volume. But we are including VRVP and anchored VWAP into this new evolution of supply and demand. And so the VRVP, let's go ahead and go over this together. Volume profile bars, horizontal bars that are on your chart. And I'm going to show you how to do this, showing volume traded, high volume areas, low volume areas, value area, the zone where most trading occurs, typically 70% of volume. And you have your VAH or your value area high and your value area low. And then you have these options right here. I will tell you here in a second when I show you the settings. I do not use the POC line, which is the point of control, and the value area high and the value area low. Now, everyone who has the indicators knows that you also get the indicators on Trading View. Okay. Now, Trading View, these are free indicators. Okay. I just want to make sure everybody understands that. These are free indicators. Okay. And I want to be able to show you what this looks like. And these are going to be your VRVP settings. Again, you guys get they get this deck, correct? Is that right? Like anyone
Yes.
that's okay.
Yes.
So you guys get these slides. And so don't worry if you don't get this right on your chart right away, guys. But these are your VRVP settings that I am going to show you. And if you want them different, you can make them different. But this is just a very basic look that I feel like is really easy to understand. Okay.
Can
Yeah.
Sorry, John.
No, go ahead.
On TOS, guys, VRVP is called volume profile.
Volume profile. There you go. All right. Now mine, I will show you some pictures here. I've always, when I use VRVP in the room, and I've shown you guys, I use TradingView for it, as I just don't want like my active trader. This is like if I go back, I look at zones and go, okay, what is the comparison between my supply and demand zone to the current volume profile? Okay. So this is what it looks like when I put it on a chart, and this is the real chart right here. Okay, just in case you want to take a look. This is what it would look like. And what we're looking at on the right-hand side here is volume shelves. And basically, for consideration of confirmation and also to build confidence in your trading, anyone who's used volume before in the past, after we've already taught you how to identify your inside and up and inside and down zones, your supply and demand zones, you can now look at your VRVP, which is completely free. Okay. And you can look to see if they are aligned. For example, these are two supply zones that I found here using, I believe this is the ES futures. And you'll notice when we look at these is that our supply zone that is over here is in line. And you could take a look at this and go, okay, is this significant for you? Like I would say this supply zone up here has a very big volume shelf that is in line with the supply zone here on the chart. Okay. I don't like that. It's spinning. Oh, okay. Phew. I thought something weird was happening. So we have a supply zone, we have confluence, and if you guys like to see that, this is going to really help you out here. Okay. And again, these are really easy settings. These are your volume shelves. This is your supply zone. So what you could do is after you find your zone, you can go, okay, what am I looking at here? Is there a lot of volume at the supply zone? And yes, you can use it in confluence with your supply and demand zones. Okay. All right. So non-extended hours versus extended hours. This is another difference between trendy methodology and a lot of different other people using supply and demand zones is the non-extended and extended hours. Okay, so there are differences. This is a chart that shows you non-extended, and this is a ES futures. So you're going to have a lot of gaps in the market. You're not going to actually see formations. And this is with your extended on right here. So now I'm able to identify my zones. I know exactly that the market has come up and tested these areas. So from a standpoint of this is a tested zone, whereas this may not be a tested zone. It's a lot clearer for me. Now, I will say this, you guys are welcome to flip on and off, but far as I work and far as I trade, I always have my extended hours on. Okay. Yes. And Confluence gives confidence, and that is the reason why we're introducing this. Okay. All right, let's go into anchored VWAP. I actually really like this idea when I realized that using this the same way that I would use my Fibonacci can actually help bring confidence as well. Now, I'm introducing these once again for traders in our ecosystem who are familiar with using volume, can use this to help identify whether or not they feel like, hey, I love identifying zones. They work really good for me, but can I take it a step further and get some confluence that would help in making me feel more confident in my trading? Okay. So what is the anchored VWAP? It's volume weighted average price starting from a specific anchor point. Okay. So it calculates the average price weighted by volume from the anchor point. All right. Key points to remember: set the anchor point at significant events, shows average price based on volume, and identifies support and resistance levels. So what does that look like when we throw it on a chart? All right. So over here on Thinkorswim, when I am using this, we are only using this section right here. We actually turn off this. And if you want to keep it on, that's totally up to you. I'm just showing you what I have on my charts. Okay. We're going to take the lower and the upper off, and we're just going to keep the VWAP. Anchor at the beginning of trend. Now, this may sound really familiar with you guys. If you are trendy members, then you know how we place our Fibonacci's. That's how I'm placing this anchored VWAP. Okay. So I teach a very specific way. It's not hard to identify where your trend starts. Okay. And that's how I'm anchoring this VWAP. This is an example. This is the ES futures. All right. And all I did was went back and used the most current range on the 2 hour. And you can see here, guys, we have a supply zone. If we zoom in here, what is this? This is your inside and down formation right here. Notice that the anchored VWAP is right in line with this. Will it be in line every single time? Not necessarily, right? Does it mean we don't still trade the supply zone or the demand zone? No, of course not. I just want to show you that sometimes using some of these tools, using volume, you're going to have confluence. And once again, it's going to create a little bit more confidence in your trading. Okay. There you go.
John,
Yeah. Yeah.
sorry, real quick, just so everyone is clear, for TradingView, you have to pay for the data version on TradingView in order for these indicators to work. It's really inexpensive, the data that John pays for, but in order for these indicators to work, you can't be on the free version of TradingView. You have to be on the paid version.
Yeah, and we have, Lorna, I think we have the information that everybody needs in order to, I think I pay like $5 a month, somewhere in there, like $5 or $6. And I have to do that as well because they just don't give that data for free. So, yeah. So what I did, on that one, let's see. Let me go to the ES futures real quick and I can give you that answer. Let's bring this chart over here. Whoops. I lost my chart there. Sorry about that. Let's open that. And let's get to, there we go, right there. And let's open that up. All right, and then actually, let's right click on here. All right, from 1/8/2026, 1/08/2026. Okay, 1/08/2026, and that's because that's where the range was that had a nice follow through. Okay, same way that honestly, guys, if you've taken the Fibonacci course for me, it's just anywhere I see range. Like, let me give you an example real quick. I'll bring over another chart. Okay, so once again, this would be a range for me. Okay, so if I wanted to anchor this, I would anchor from here. All right, anywhere that I see range. All right, and in the room, I can help you out if you guys have any questions and so forth. Okay, all right. So that is your anchored VWAP. Here's another example on NVIDIA. This is a inside and down formation. It's hard for you guys to see this level in here, but this is an inside and down formation, and you guys can see once again the anchored VWAP is here, and so it is confluent. You know, Mel, you and I were talking though. I'm trying to explain this the best I can. I already know this, and
Right.
I've been doing this a very long time, guys. What I have noticed with tools is that a lot of times the tools will be at or around the supply and demand zone. I've never introduced them or used them because I'm already under the impression that I am aligning up with institutions and we already know how to trade the process. Again, these are just tools. If you like to use them, I would encourage you to use them to give you a little bit more confidence in the zones. Okay. More things line up, better things can happen for you. Okay. All right. Same thing here. Can't make this up. I use the trend. You guys can see that. So, for example, just so that you understand, right here, check this out. Boom. That's all I'm doing. I'm measuring from right there. I had a demand zone. See this inside and up formation here? And believe me, this is just so everybody knows, I didn't go back and like have to try a million things to make this confluent. I'm simply using trendy methodology on where to anchor things based on my Fibonacci. And look how it just perfectly aligns with the inside and up formation here. Okay. Pretty cool. All right. New acronyms. This is actually one of my favorites, the PEZ. We came up with that and absolutely love it. So the new acronym that everybody, it's called Precision Entry Zone. How many of you guys know what PEZ is?
Those little nasty candies.
Do
They're so
not call them
disgusting.
nasty. I
Oh, they
love
do
PEZ
not
candy.
taste good.
Oh
No,
my
sir.
goodness.
That
Oh,
is like fake nut.
okay. How many people in here like PEZ? I swear. I swear. Am I the only one that likes junk food? Oh, he said heathen. Joe said heathen. I love it. Oh man. Oh gosh. So PEZ though, this is a new acronym, guys, and it's absolutely freaking amazing. It is instead of being early, we use Melissa's new approach, precision entry zone. I love this. And every time you think of this, see, you should have said something good. Every time I think of PEZ now, I want you to think of Melissa, not as a bad piece of candy, an amazing piece of candy. All right. And we wait for structure to reset. We do not rush. The RTZ is called a retail trap zone. So we have PEZ and RTC or Z. These zones identify where retail traders get trapped, typically around obvious breakouts. Our process helps traders avoid traps and trade with institutional flow. A flush low below a demand zone or a flush high above a supply zone, this is what traps retail traders. We wait for closes on the time frame that we identify the zone before stopping out. Okay? Now let's just real quick before we move on. Let's say that on the ES futures, I have a 4-hour chart. All right. And let's look at a supply zone. All right. And I'm just going to put this zone on here. And this is just for a quiz. Okay. We're going to say the zone is right there. It may not be perfect. I'm just going to put it there. When do I get stopped out if price were to move to the upside? And let's say that I get in. How long and what time frame do I use in order to get stopped out on this chart? I have to wait for a close on what candle? It's really straightforward, guys. If you find a 5-minute, you're not getting stopped out until 5-minute closes underneath. If you found a 1 hour, you're not getting stopped out until 1 hour closes. Okay. Now there's a big rationale behind this. The majority of traders put their stops in the same areas, believe it or not. Somebody could be using VWAP, somebody could be using RSI, MACD, crossovers on EMAs, Fibonacci's. The point is that the majority of retail traders tend to put their stops all in the in the wrong places, and the market knows this. They're not just seeking out certain people. Steve, they're not looking for you. Mark, they're not looking for you. Shoshana, they don't care where you guys have your stops. But what they do care about is when the masses have their stops all in the same places. It doesn't take a rocket scientist to figure out where the majority of us retail traders are putting our stops. Most people place hard stops right in an area before they watch things work out for them. It's actually super sad. And what we find is that in the market, most stops happen. This should blow your mind. Most stops happen on a long in a demand zone. Most stops, well, on a short, sorry, on the long. So if you guys are going long, right, and then market pulls back on you, this is where they stop you out in a demand zone just for you to watch price move right back up, right? And then when this happens, same thing, right? The opposite occurs. We found that using the close of a candle on the time frame of the zone is what really gave us an edge in not getting stopped out. And Melissa can give you the stats on what she looked back, and she was basically finding out, Mel, 85% of our
Yeah.
of our trades worked for us.
So whenever I first started, I actually calculated waiting for a candle to close beyond my stop versus stopping out at my set stop. And 85% of the time, it was beneficial from a monetary perspective for me to wait for a candle to close.
Yeah, and of course, guys, some of you are going to be like, "Man, a lot could happen in 5 minutes, right?" Like I could be in the ES futures, and if I waited for a 5-minute close, that could be like, you know, me taking a $500 loss or me throwing down my computer and getting really angry. But what we found is that when implied volatility, especially, is not super high and we're not in a capitulation event, of course, I would probably resort to a little bit more of a hard stop there. But if conditions are fairly normal, implied volatility is down, then honestly, waiting for candle closes has worked so extremely well for us. And we actually do this live a lot, especially in futures trading every morning, is where I just sit back and like allow the candles to do their thing. The market knows this. It basically is taking liquidity from traders that are all basically doing the same type of thing, hard stops all around areas where most people just take your liquidity and then move prices right back up in the right direction. Okay. So that's a big, big thing that we do differently here. All right. So go ahead and explain your precision entry, Mel. I'm
Awesome.
just going to listen.
Well, you better be doing these slides though.
You know it.
All right. Good stuff. Thanks, John. So, for me, just a little backstory. I've obviously been trading supply and demand for John for over 3.5 years now, and I was trading it the same way as what I'd been taught, and that was you see a zone, you know your risk, you take the trade, and I was doing that, and I was profitable and all of that, and but then about a well in September October timeframe of 2024, my husband lost his job and I needed to trade for income SPX. And whenever I was just taking trades at zones, I was finding myself getting a lot of losses that were wiping out the profits from my wins. So I needed to come up with a way to get a better entry in a zone. And that's when I developed the confirmation process. So, really quick, let me explain how this works. This works for long-term trading. This works for swing trading. This works for day trading, scalp trading, all types of trading. Okay. The very first thing that needs to happen is that price pulls back into, in this example, it's a demand zone. Doesn't matter if it's a demand or a supply zone, but let's talk about price pulls back to a demand zone. That's the first thing that happens. The second thing that happens once price pulls back to my demand zone, I move to a lower time frame chart. I'll give details about what time frame in a minute. The third thing that happens once I move to the lower time frame chart is I am waiting for a higher low candle inside of that demand zone. Yes, wicks and bodies count. I don't care if it's a wick low or a body low, the lowest point is the low for me. Once I get that higher low inside of that demand zone, the fourth and final process is my entry. And my entry comes on a break above the higher low candle body. Not a candle closing above there, the break above the higher low candle body. So, if I get all of those things that happen, boom, I take the trade. I don't know anything about Harami candle body or anything like that, Mary Jane. All I know is that it is a break of the body of the higher low candle. So John will draw it out. Price, we have a demand zone. You have to know where your buy zone's at ahead of time. Price comes into the demand zone. We go down to the smaller time frame chart. I wait for a low to be established. Once that low is established, then I watch the very next candle, right? The very next candle. If that candle produces a higher low, then I have my order setting ready to execute. I put an alert at the top of that body. I don't care about wicks or anything else. The top of the body, I put an alert there. I'm setting on the entry button. If the alert goes off, I bid the mid on a limit order and I take the trade. My stop is a lower low. Lower low. Candle close below that low that got me in. Okay?
And I have to put some input here. These win a lot, like a ton. It's pretty amazing. It really is. And what's more amazing about it, Mel, is when it doesn't do this. So let's draw that. So example, guys, we have a demand zone. Price comes down. Okay. Gets in here, as she said, go to a smaller time frame. Okay. Say I'm gonna put a wick on here so you guys can so say we have a low right in there. Sorry. And then price the next candle goes up. I'm like, heck yeah. I set an alert, like Mel said. I'm waiting for prices to cross here before I go enter. Next candle opens up, takes out the low. Guess what? No trade. Process starts all over again. So let's say it still hasn't broke down below the demand zone. Next candle is inside, or it doesn't have to be inside, sorry, higher low. It closes. I know where my next entry is. Set my alert. As soon as it takes off from here, boom, I'm in. I do get the trade, put my stops in. Prices continue up.
When he says put
Oh,
his stops in, let me be clear. That is an alert for me. That is not a hard stop right there because I do commit to candle closes.
okay, there you go. Awesome. Anybody need me to draw that again? I'm pretty good at it. I swear I've been doing this for the last couple weeks. I love this strategy. Let's see. Sorry, I'm trying to catch up with the. Okay, cool. Demand zone. We can do one on both sides, okay? Demand zone. Prices come down. Let's say that we're looking at what, Mel? Like let's just say the 5 minute, okay? 5 minute comes down into a demand zone. Mel goes over to, let's say, a 3 minute,
3
right?
minute.
She's going to a 3 minute, and she's going to go over this here in a second, okay? And there's a low that happens. How do we know it's a low? Well, we don't really know if it's a low until the next candle opens. The next candle opens. Okay. We're thinking in our head, we got 3 minutes, right? It's 1 minute, it's 2 minutes, 3 minutes. Boom. It closes here. That means her alert goes in at the top of this candle. Okay. She's waiting, waiting, waiting. The next candle, it goes over. Boom, her alert goes off. She gets in at a limit price, like she said. Her entry goes in. And to say it one more time, she's not putting a hard stop. She's committing to a candle close, which would be a 3 minute candle close underneath this, correct?
Yeah,
Okay.
from the low, not from that higher low. The low at
Yeah,
the
down
bottom.
here. Yeah, yeah,
Mhm.
right here.
Yeah.
Okay. So it's right there. So let me just build out this scenario real quick. Let's say she were to go long right here and it looks really good and she takes her profits fast, or let's say it's looking good, but it turns. Okay, it comes down. This is what happens a lot of times. People have hard stops. They get boop, and then they get liquidated. Price comes right back up, and then boom, this happens. So what she's waiting for again is a 3 minute close. It closes under
5.
or 5 minute.
5.
Okay, five
Yeah, I'm
minute.
on a 5-minute chart. Yeah.
Okay, 5 minute close underneath this, and then if that happens, she's getting out. Okay, vice versa. Let's do the put side. Okay, prices move up. We're going to a supply zone. We make a high. How do we know that that's the high? We don't really know until the next candle opens. It gets down here. It is a lower high. Okay. It stalls. She puts in her alert. Boom. She waits for that next candle to move down underneath. Say it moves right here. Her stop, again, her alert stop, not her hard stop, is this high right here. And she is going short to her targets. Okay? Everybody understand that? This is what it looks like. It's almost like a formation, if you will. Okay? It's a formation. Higher lows, boom, entry, and then our stops are underneath. Alert stop. What if it gaps below the entry point, is what Deepak asked.
I don't
Yeah, I don't know.
really,
I don't know what
yeah,
that
I
means.
don't get that.
Yeah, not sure what that means.
Fairview, I'll go over the times in which candle I'm watching. And it does not have to be an inside candle formation, guys, not the same at all. And
Yeah, yeah, it
it
does not
it
have to be.
just the price moves into a zone. Go to a smaller time frame. I'll go over those in the next slide probably. Switch to a smaller time frame chart. I wait in a demand zone for a higher low and a break of the body above, and I enter. From a supply zone, I wait for a lower high, a break of the body of the lower high candle, and I enter only if risk to reward is worth it.
Mm-hmm.
Oh, targets. Yeah, we got lots of ways to find targets, Mike. Mainly it is candlestick structure, of course, and we use Fibonacci also for targets and different trendy indicators. So the cloud and things like that. All right. So the confirmation process in a demand zone, again, number one, price enters a zone. Number two, you move to a smaller time frame. Number three, I wait for a higher low. Number four, a break above the body of the higher low candle equals entry if the risk is less than the reward. And I consider the reward at my first target. The risk is a lower low once I've entered. If that lower or if that low is taken out on a candle close, I stop out of the trade. Vice versa in a sell zone or a supply zone, if there is a higher high created after I have entered the puts or the downside trade, then I stop out on a candle close above that high. Okay, same exact thing. Let's go over it again. Price enters a supply zone. I move to a smaller time frame. I wait for a lower high. Then I wait for the break of the body of the lower high candle. I enter a downside trade.
Yeah, it's awesome. It's absolutely awesome. And I keep drawing them over and over, but even in the room, Mel does a really good job of just making sure that she calls those out and then tells you what the risk is and what the reward is. It's really nice. And then as you catch on, you're able to apply this to your trading. Okay. Why is that on there?
I have no idea.
Huh. Okay, there we go.
All right, let's look at an example on a 4-hour demand zone. I have went down to a 30-minute chart for confirmation. Okay, so on those white candles right there that you see to the left, John,
Yep, right here.
price enters the demand zone. I flip down to a 30-minute chart and I am looking for a higher low and a break above the body. Once I get the low, once I get a higher low, a break above the body, that is my entry point.
Yeah, and can I point something out on this chart
Yeah,
real quick,
yeah,
Mal?
sure.
So right here, guys, watch my arrows. We come into a demand, she flips to a smaller time frame. This is a 30-minute. And what I want to point out here, this is actually a higher low right here. But look at the third candle. This saves your ass right here. Okay.
No break of the body.
Yep, no break of the body. Down here,
You
she
got it
goes in.
again also.
Yep, right here. I see that.
Yeah.
Yep,
But
yep.
this was my actual entry.
Right, right. This was her actual entry right here. higher lows. It breaks above this body. I wish I could zoom in, guys, but well, there it is a little bit. So right, if you draw a line across here, this is where she's entering. And then you guys can see the results after that. And then look, the demand zone not only works, but the entry works, and boom. This process of dialing this down, I love when you make money out of it, but it's even just as special when you don't enter the trade because you didn't have to. That's the most important part for me. It's just like it's so nice. All right.
T-Dub, that those previous slides that you're talking about, those weren't actual entries. These are actual entries for me. So those are just created slides using AI. Yeah, you're welcome. All right, here is an example on a daily, and these are actual trade examples, guys, not like just random charts. Okay, this is a TSM trade. Price entered a daily demand zone on TSM. We went down to a 2-hour chart to wait for a low, then a higher low, and a break above the body of the higher low candle to enter the trade, trimming at first target and exiting at the supply zone. So this was another great confirmation trade. JK, thanks. Confirmation process changed your process, saved you tons of money. I'm happy to hear that. All right, here is another example, and these are like backwards, but CCL, this was Carnival Cruise Line. You can see the chart on the right is a higher time frame. This was on a weekly demand zone. So once price entered this weekly demand zone here, I went down to a 4-hour chart. And I really like this entry because it shows you that I didn't give up on that weekly demand zone, and price actually came all the way down to the bottom of the zone, right? But I still didn't give up on the idea. So I waited until a low was established. Then I waited until the higher low was established. Then, if you look, I had to wait. This wasn't just like one day, this was multiple days because I had to wait for break of the body before actually going long. Now, that might not seem like a big deal, but remember, as options traders, guys, if we're sitting in trades for 2 or 3 days and they're really not moving, we're losing value of the option. So waiting for the price to break above kept me from being in that trade with no price action for a couple of days. Then I took the trade on the break above the body and exited that trade again for a win.
Very nice. Very nice.
Barney, the high of the low bar and the low of the high bar is not that process. So high of low bar and low of high bar, they use wicks and weight. It's just not the same process.
Yeah, because we did check it. We did check it.
Yeah.
Yeah.
Let's see. TJ, I don't remember honestly how long I was in the CCL trade, but you could check in the alerts though, in the room, how long I was in that trade. Um, on the last slide, Trone, do you mean the Carnival Cruise Line slide or the other one?
This slide right here is what he's
This
saying.
slide, uh, let's see. On the last, should the white entry line be higher?
No, it would be right here.
Oh,
So let me zoom in so I can show you. So this was the low right here. This is the higher low, and then the entry goes on a pass over this level. Okay. Notice she entered here. She took a little bit of heat for a few, and then it starts to take off a little bit later. Okay,
He's saying on the right chart.
on the right one.
So
Are you saying like maybe? Are you talking about this like line here? Should have been like maybe underneath this, or because there's a wick I think right there that you can't see.
the entry line where I no, that's my actual entry. That's that same white line.
Yeah, it's this one.
Remember, the chart on the right is the weekly chart.
Mm-hmm. It's just kind of she has the smaller time frame on the left side.
Yeah, David B. So I think we talk about this in the class later on, how we will trade zones and scale into zones. Uh, I don't know. That might be in our breakout session, David B. So, if a zone is a fresh zone, different criteria, I'll speak for myself, but I know John does this also. I will start a position with a small allocation, not my full allocation, and then add to full allocation we using the confirmation process for me.
And then let's see. Joy said, "Hey, was there any reason why you didn't enter any of these over here?" I mean, I could always tell you sometimes when I have entries, and if I had a failed entry before that, or not a failed entry, like I just happened not to take the entry, I could have went to the bathroom or to the dock or timing is the variable, but I'm not sure I
Well,
can answer for Mel.
if you look at the trade itself, right? I have no idea. To be honest, I can't say for sure when or where or what was happening. I might not even have had this chart like looking for the trade during those days. You know what I mean? I have no clue, to be honest with you.
Yeah, because those are 4-hour candles. They could have this are days ago. So it's a
Yeah.
little bit different. So it just looks a little confused or not
I mean,
confusing, but
4-hour candles. This
yeah,
is that time frame that you're looking at there. That could have been what? One,
several
two,
days.
three, four, five, six, seven. That's about 2 weeks, actually.
Yeah, and actually, Mel, if you're looking over here, like this candle
Uh-huh.
here is probably only this section in here.
Yes.
Yeah, that's why. And I see what you're talking about. Yep. Yep, yep, yep. Kimberly says, but couldn't one wait to see price action go sideways after going down for a period of time and then look for a higher low candle?
You can, Kimberly, absolutely. I mean, we came down to the bottom of a zone for me, and I got a higher low, and I got the break of the body, and I entered it. It took like I seem to recall about 2 days waiting for the entry before we broke above it, and then I entered.
All right, so
Uh,
can we
I
use
thought I think one of my charts or one of my slides, John, that I had put out for time frames got
mhm.
deleted.
Yeah, that's weird. The one that tells us what we use for stops, correct? Is this it
Or
right here?
I don't know about for stops, John.
Um, yeah, I don't know why it got deleted. That's weird. Understand trading confirmation, 4-hour zones, daily zones. No, that's confirmed. Yeah.
So let me just go over and let y'all know what I use for confirmation, what time frame chart I go down to. That's the one that got deleted, John. So if I find a zone, a buy zone or sell zone, supply or demand zone on a weekly chart,
Mel, this
the
is this is it right here. It's because of the title. That's what it is. Do you see that?
oh,
Yep, yep,
yes.
yep. So give me 1 second, guys.
Okay.
I'm
I
gonna.
was so confused. I'm like, I know I had a slide
Yeah,
in there.
here you
Whew.
go. This is what you guys are looking for. Trading
Confirm.
zone confirmation. Yeah, let's do that
Whew.
right there, guys. And let's go to slideshow. Boom. I was like, wait a minute, this is not matching up. This is it right here. Sorry about that, guys. The title is Trading Zone Confirmation. This will clear up some of your questions there.
Awesome. Cool. Thank you
Hmm.
for trading or finding that.
Hmm.
All right. If price, I have found a demand or a supply zone on a weekly chart. It is best confirmed with 4-hour or daily candles. Okay. Read down at the bottom. If the trend is counter, then I use the higher time frame candles. If the trend is in line, then I use the lower time frame candles. What that means is if I'm find a zone, let's say a demand zone on a weekly chart right now on Apple, and I the trend is bearish and it's a demand zone, which is a bullish zone, guys. That would be counter trend. So I would use daily candle confirmations in that weekly zone. Okay. If the trend is bullish and price is pulling back to a weekly demand zone, then I use 4-hour candles for confirmation. All right. In a daily zone, if price is pulling back in a bullish trend and it's pulling back to a demand zone, I'm going to use a 1-hour candle. If the trend is bearish and it's pulling back to a daily zone, I'm going to use a 2-hour candle. If price is pulling back to a 4-hour zone and I'm looking for a bullish trade in a bullish trend, I'm using 30-minute candles. If I'm looking for a bullish trade in a bearish trend, I'm using 1-hour candles. My day trading zones, it doesn't matter. I day trade off of 5-minute charts and I move my time frame down to a 3-minute chart and I wait for the confirmation process and I trade that day after day after day after day. Twins mom asked about applying this for equity trades. And Twins mom, I'm just going to speak for myself as far as equity itself. I do not use the confirmation Twins mom because in my equity account, I don't babysit that account. So I have my buys set up at zones, at demand zones months and sometimes years in advance. So there is no confirmation for equity. But I will say, if I were trading a leap option trade, elite option trade, Twins mom, on a quarterly demand zone, then I'm looking at daily or weekly candles for confirmation. Okay. Roland, for day trading, what time frame do you find your zones? Multiple different time frames, but typically the major zones are found on 2 and 4 hours charts. You're welcome. All right, and you'll get this slide deck, like John said, so you'll see what time frame chart I'm using.
Hmm.
Please explain how you place your stops on a weekly zone. I know it's a candle close. Is it on the weekly chart or the confirming chart? So if I'm doing a confirmation trade, Gary, it would be like if I'm on a weekly in a weekly demand zone and I'm using a 4-hour confirmation, if I make a lower low on the 4-hour candle, I would go ahead and stop out.
All right, let's go on to you already went over the 4-hour demand, 30-minute confirmation, daily demand, 2-hour, weekly demand. Using quadrant lines, guys, so this is the last portion of this. Anytime I have a big zone, all right, and this is especially true for futures trading, I do this a lot. It works out very, very well for me. I place quadrants inside of the zone. A lot of you guys have probably seen this before, but if you haven't, let me go ahead and show that to you really quick. So what happens is if I have a really wide zone, okay, kind of like this guy, like let's go over here, let's tuck this up underneath, that bigger move out. Let's go in here. I still think this is pretty wide, okay. Let's come up into here just like that. I'm going to go, hey, this is too wide. Like, I'm not going to put a stop. I might even dollar cost average. I use the tool on Thinkorswim. Simply click your wheel, and then you have this quadrant lines. And I do a quadrant line from the top to the bottom. I do this when I want to dollar cost average into futures, stocks, um, into leap trades. Because a lot of times when I'm dealing with quarterly zones, they're super, super wide. And as I've always told everybody, if I'm not going to, I may or may not get my money right away, right? It might go against me, and my plan is to dollar cost average into something 365 days out. Okay. So, for example, what I do on this setting is I simply edit the properties in the quadrant lines and I make this 25, 50, and 75. Okay. So, quarters. All right. And up here, I do not show the name because sometimes I get it backwards. It'll be like 75% up here and 25 down here. So, it's a little confusing. So, I just take that off. Okay. That way they're just all 25%. And what I do is I dollar cost average into bigger zones. This could be Apple, this could be Amazon. It doesn't matter. I know it's a demand zone. And what I'll do is I'll break down the zone into sections. So let's say that I want to take $5,000 worth of Amazon, right? In options, I'm going to start a position here, say it's $1,500. And every time I get down to a section here, I'll add another $1,500. Now, I do this in futures a lot. So if the zone is too wide, I'll pick one of these. And a lot of times, what I'm doing, watch this, it's really, really neat, is that if you follow the quadrants across, this is a really cool tool. So if I take this across from here, it's right at the top of this candle here. If I were to come down to here, what I'm noticing in these wider zones that almost all the time, especially as Mel had said, look at the trend, it's down. So we want to make sure that we are using, wait, the trend is down. Should we be using a modern or a classic zone? Which one? What should I be using here? Modern or classic? Modern. Okay. So we got to make sure we're using modern zones. Okay. If the modern zone is still too wide for me, then I love the quadrants, guys, and I do very well in my futures trading. This just really works out for me, and once you start looking at your zones, you'll start noticing a lot of times that the quadrants actually like line up with special pieces or parts of the puzzle within the zones. Okay, so again, I just wanted to show you that that's a free tool that's on Thinkorswim. And again, it helps in longer term trades, allows for dollar cost averaging for me. In many cases, this shows the different areas one could create modern versus classic and creates a plan in advance for adding in wider zones. Okay. All right, let's take a break there, Mel, and then we'll come back and finish this up with what is between your ears. Because to me, everything we've learned today, honestly, is just an amazing piece of the puzzle. But if we don't have the right mindset, all of this doesn't really matter. Okay,
For real,
for
yes.
real. So let's
5 minute
tune
break.
in. Yeah, let's do 5 minutes and then we'll get back.